Hello, everybody, and welcome to the 19th edition of LM's Weekly Wrap, our weekly program to cover all the developments which have happened in the global markets, the domestic markets, and the repercussions on the individual stocks, the individual stock performances, etc. We've had a kind of a very busy week since the last few trading sessions. We've seen markets in very good shape. We've seen global developments also beginning to look a bit positive. With me, joining me is Jash. He'll be explaining to us the global developments, the repercussions on the markets. And we had a good run in the domestic markets as well. In the domestic markets, I think today we had 8 clean days of clean run for the markets, supported by good FII buying. The FIIs have changed their stance on the market. They've had a very positive stance on the markets. And to explain more about the global developments, we have Jash Shah with us. So he'll be explaining the global cues to us.
Jash? Thank you so much, sir. Yeah. And it's a pleasure to be here in front of you all. As usual, I'm going to brief you about the global and the domestic markets. 2 weeks ago, I said that it's very important for the market to sustain 18,000 levels, and we've seen the market has almost rallied 1,000 points after that. We see the markets are in very good shape. Even though the market took a breather today, mid caps and the small caps rallied, and I think it is going to be continuing in the coming week. Coming to Fed Chairman Powell's speech, which was a very important aspect for the market this week. Basically, he said that they're going to slow down their increasing in rates, and we now expect about 50 basis points hike instead of 75 basis points hike, which was happening in the last 4 sessions. So that was cheered by the Dow Jones and the Nasdaq. It was almost up by 5 and 7.5%. Also, the China zero COVID policy has led a lot of disruptions. The crude oil prices have come down, and also the dollar has been weakening. Because of the dollar weakening, we see the commodity and the metals rallying in our market. I think India is coming back to India. India is poised for a very good growth outlook with the number of weddings which we have already mentioned. That is a whole ecosystem on its own, and that is increasing substantially. And the spending power over there is very high. So we see a lot of traction on that bit. Also, when we come to the construction and the building materials, the infra projects that are happening in India and led by the government are very high level projects, and the spending power over there is very high. And the coming 24 being the election year, that is going to mark a very different trajectory on how the next year's budget and policies are going to form. So I think all in all, the market is looking in a very good shape, and it is poised for a very good growth right now. For the sector outlook, I'm going to hand over to Nirav, sir. Thank you.
Yeah, thank you, Jash. So as rightly pointed out, economy seems to be in a good shape. We've been just completed the earnings season. We've just completed the festival season, the pent-up demand, which we have been discussing since quite a few weekly wrap sessions. Now, first of all, we start off with the auto sector. We had the auto sales numbers, and it not a very impressive. It's kind of a mixed bag, and exports have disappointed big time across the board. If one were to look at the export numbers, they've been pretty disappointing. But the domestic scenario,
I think it clearly shows the global scenario where
the global turmoil is clearly reflected in the export numbers. But domestically, I think passenger vehicles, commercial vehicles, they continue to do pretty well. So I think not much reaction given by the markets to the auto sales numbers. It's been kind of a muted reaction. But we are seeing a lot of traction happen in the auto ancillary space. So we've seen good quality auto ancillary stocks beginning to rally. We are seeing the tire stocks have been on a tear, literally, because the natural rubber prices have hit a 2-year low. Synthetic rubber, because of crude oil price correction, is also correcting. So I think the margins are expected to improve going forward. And
I think also something similar on Castrol side, because of the oil going down, they are also going to have a very good margin expansion.
Yes. So I think tires and automotive batteries, etc. Stocks, they have started performing well. Auto ancillary stocks have started performing well. So that side of the market is performing quite well. In the case of autos, I think the best is behind us, at least for the time being, because Q4 tends to be a quiet quarter as far as the auto sales per se are concerned. But so that is there. Second, we come to banking. I think the banking stocks are also taking a breather. We've seen a good run in the private sector banks. We've seen a good run in the PSU banks, and now I think can expect quality private sector banks like ICICI Bank or HDFC Bank, and quality PSU banks like State Bank of India to take the leadership mantle from year onwards. Third is the cement sector. Cement sector is also hoping, it's a hope rally in the cement stocks also, because they are expecting the margins to improve, the margins to make a comeback, cash flows to improve going forward. Because this has been a kind of a washout quarter for the cement sector as far as the margins are concerned. Now they are expecting the cost pressures to ease and demand to make a comeback. So it's kind of hope rally which is there in cement, led by Ultratech Cement. We've seen stocks like JK Lakshmi or Birla Corp or Dalmia Bharat, etc., making a comeback in the market. So there too, selectively there is a good run up in the cement counters. Capital goods have been largely muted, but I think infrastructure activity is showing signs of picking up. We are seeing good traction in a lot of infrastructure players. They are expected to do very well in the coming year. After this, we come to FMCG. I think the FMCG in many ways was a star sector of this week. Apart from metals has been the biggest gainer in this week, of course, but we'll come to that a little later. I think FMCG stocks rallied in this week on hopes that demand is going to revive. Secondly, the cost pressures are going to ease, and more so, of course, on the fact that government is likely to focus on the rural side of the economy. The mass, the bottom of the pyramid, the masses have been impacted by the pandemic. On the urban side, it's been kind of a smooth sailing. So I think FMCG stocks rallied, led by Dabur. Dabur generally carries the mantle as far as the rural demand is concerned. So we've seen good traction in FMCG space. Then, of course, coming to the pharma space, I think pharma continues to reel under a lot of pressure. We are getting a lot of negative news flows with respect to the US FDA related developments also. So this week again we saw that Lupin Limited has got some adverse observations with respect to the FDA. A lot of companies reeling under pressure. So I think pharma is largely quiet as far as the developments are concerned. Then we have IT sector. I think IT sector was the biggest beneficiary from the Federal Reserve's comments. I think after the Federal Reserve's comments we saw yesterday, most of the IT stocks they began on a very strong note, and there was good follow-up buying also happening in the IT sector stocks. So whether they were mid-cap stocks or the quality large-cap stocks, they've all rallied in trade yesterday. And finally, metals was also a beneficiary of the comments which came in from the US Federal Reserve. So this week in a way was a kind of a breakout week as far as the metal sectors is concerned. Nifty Metal Index was up around 4% in this week. So very strong developments over there. And finally, Realty is also showing signs of coming back. We've seen some positive announcements today. Godrej Properties acquiring a big project in Kandivali. Prior to that, we have news that Adani is going to redevelop the Dharavi slums, etc. So I think all in all, we are seeing good traction as far as the economy is concerned. On the stock side, I think some of our weekender stocks continue to perform exceptionally well. We've seen Action Construction Equipment achieve its target. Secondly, we have today in trade we had RK Forge, which was rallying in trade, Titagar Wagon rallying in trade, Jyothi Laboratories performing well in trade. Now, a common link which is emerging is that railway stocks are performing very well. So, the PSU railway stocks, of course, we have discussed them many times, but there are a lot of private sector companies also which are going to benefit from the developments which we are seeing in the railway sector. So, companies like Titagar Wagons or Texmaco Rail, Jupiter Wagons, the companies like Siemens, they are going to benefit in a big way. Timchem is likely to be a very big beneficiary of the developments which are taking place in the railway space. So railways, defense, these are the areas to watch out for. In hotels, we are seeing good traction happening in Lemon Tree, the stock hitting a century in trade. I think positive cues all across. So I think one should definitely stay invested in the markets, and also at the same time keep booking regular profits. So just take a little bit money from the table, keep booking a few profits,
So you
but
can always-
largely stay invested.
Yeah, so you can always enter when the markets go down.
Yeah, but largely stay invested, but do keep booking profits also at regular intervals.
I think they can keep booking 5 to 10% of whatever they are earning.
At regular
Correct.
upsides.
Yeah.
So I think that's about all from our side.
I would definitely like to add 2 points. One is if you wouldn't want to miss our videos, please like, share, and subscribe. And if you don't want to miss our research calls, please download our app, LM InvestMart. All our research calls are there, and you can buy and sell directly from that tab. Thank you.
Thank you, Sam. Thank you so much for a patient.